If you are just getting started in crypto, you literally could not be getting started at a better time. Sure, you could have bought 10 or 15 years ago or started to get involved in it when the nerds who rule the world were first starting it, but the bottom line is that you are still early, and I cannot emphasize this enough. I don't care if you're watching this a year from now, 2 years from now, 3 years from now, you are still early. People have no idea what's coming. And the fact of the matter is, as of the filming of this video, cryptocurrency as an asset class has less than 1% market penetration in terms of where money is stored between real estate, stocks, and other assets that people invest in. And so the fact that we are still at this point and we haven't even achieved that level of market penetration. And so although it might seem like the opportunity is past, or you might be wondering if you're too late, the truth is you are just in time. In this video, I'm going to be covering everything that you need to know as a beginner in crypto. I'm going to be covering how to trade, how to buy, where to do it the most efficiently, things to be aware of that you hadn't considered, like gas fees. I know just saying that, you're probably wondering to yourself, what is a gas fee? Don't worry, we'll cover that. And we'll also cover topics like how to stay safe and avoid getting scammed, because the truth is just like every financial product out there, there are a lot of scams in the space. For example, if you see any scammers in the comments section trying to talk to you, just ignore them. And if we ever reference a link in any of these videos, they'll be linked in the description so that way you know you're going to the right place. And in addition to telling you all about crypto and what you need to know in 2025, I'll be giving you the inside scoop on which coins I would invest in if I was looking for the safest bets or just a good foundation in crypto, as well as some of the riskier coins where there is an asymmetric upside potential, meaning these are the coins where you can get a 10x, 100x, 1000x gain. Yes, literally 1000x on your money, meaning for every dollar invested, you would get $1,000 back if it works out and goes as planned, which the truth is for every coin that does that, there are maybe 100 that fail. And so the way you want to approach this when you're going after those particular coins is really going to be based on your risk profile. And I'll even talk about how I find those coins and more. But before we get started, if you haven't done so already, hit that like button for the algorithm. It's a free way you can support the channel, and consider subscribing if you haven't done so already. We put out daily and weekly content on crypto and the Web3 space so that you can stay up to date on what's happening in the space and stay on top of the latest trends. So first off, let's take a look and explain what blockchain technology is and why does it have so much value. Now, Bitcoin is the first cryptocurrency that was created or that gained widespread adoption. And the whole concept of Bitcoin or crypto took off like a wildfire. And the reason is because of one phrase I'm going to share with you: public ledger. So what is a public ledger? Well, I want you to imagine yourself in the traditional finance space for a second. And imagine if you had a bank account that was encrypted and secured and you could post your account number online. Now that is something you would not even think about doing today, because if you posted your bank account number online, a bunch of scammers would come out of the woodworks, use that information to try and draft money out of your account, and your account would be closed down in no time, and you'd have to open up a new one due to all of the fraudulent transactions that people were trying to initiate against your account. But in crypto, because it's a public ledger, the way the blockchain works is that all transactions in and out of every account are public information. And the reason this is valuable is because it's encrypted and secured, meaning just because someone has your wallet address does not mean they can access your funds, and it's 100% anonymous and decentralized, meaning that in order to open a wallet, you don't need a bank account, you don't need any identification, you literally don't need anything that a traditional bank or banking system requires in order to know who you are. Now, if you're going through an exchange, which I'll talk about in a second of why you might need to go through an exchange, because it is important for most people to have access to some sort of cryptocurrency exchange, but that's not the only place to buy crypto. In fact, a lot of times it can be done on a decentralized exchange. And if I've already lost you about how this actually works and what a public ledger means, the truth is that this is a very complex topic. And so I'm going to give you a resource that was extremely helpful for me that was free when I first got into the crypto space. And it was a documentary called Cryptopia. And I'll make sure to link that in the description for your convenience. But that documentary helped me visualize and understand what exactly was happening with a public ledger. Because when I first read about cryptocurrency and started getting into it and buying Bitcoin, I also had a little bit of a hard time wrapping my head around what it was that was so valuable about this asset class. And then when I watched that movie is when it all clicked for me and made perfect sense. But building off of what we've already discussed, what I want to talk about is what an exchange is versus a decentralized exchange, or which would be something like a Uniswap wallet or any sort of DeFi wallet where you can swap a cryptocurrency without interacting with an exchange. So an exchange serves essentially one purpose, and that purpose is converting your fiat dollars, meaning your Mexican pesos, your US dollars, your euros, whatever currency you're using, converting that from a fiat currency into a cryptocurrency. Now, once that is done, then you can start trading cryptos basically at your leisure, either through a decentralized exchange like a Uniswap wallet or some other sort of wallet that allows you to swap off exchange. And the benefit to that is that when you're dealing with an exchange, there's two things that can happen. Number one is you're going to have to go through a KYC process in most countries. KYC stands for Know Your Customer. And what this is they're going to require your identification and some sort of check just to make sure there's no sanctions and things like that. It's a basic check depending on which country you're in. A lot of countries don't have any laws related to crypto. In the United States, obviously, there's a lot more regulation, and so all exchanges are required to have some sort of KYC protocol in place. And this is why a lot of exchanges actually don't even do business with US-based customers because of all the regulation that goes into staying compliant in the United States. And so just to stay out of their legal crosshairs, they don't allow US-based customers to use their exchanges. And this is why it's important once you get onto an exchange, like the most common ones in the United States are going to be exchanges like Coinbase or Crypto.com or Kraken or Gemini. And I'll link those in the description for your convenience. But the bottom line is that those exchanges' sole purpose is to convert your crypto back into US dollars, euros, whatever fiat currency for the country you're in, and then transfer that money into a bank account. So it's just an intermediary because currently banks do not custody cryptocurrency. Now, that is as of the filming of this video. It's 2025, late 2025. And so over the next couple years, we might start to see some regulatory shifts where banks start to custody people's cryptocurrency. And so you might be able to custody your coins and get a wallet address at your bank. And that could change everything. And when that happens, don't worry, I'll make another video about it. So make sure you're subscribed if you're finding this content valuable so far, because the purpose of this channel is to help inform people in the crypto space and be a very transparent asset and resource for people, and also was created to help promote one of my projects that I'm using to fund a private foundation, which I explain in another video, so I'm not going to talk about that in this video, but I'll make sure to link that video at the end for your convenience. So now let's talk briefly about how to not get scammed in crypto. Now, the first thing you're going to want to understand about crypto is that the keys that you get to your wallet control everything, meaning that when you open up a Coinbase account or you open up a wallet like Coinbase wallet, which is now called Base Wallet or Trust Wallet or an Exodus wallet, and they give you your keys, which are going to be 12 to 24 words. Those 12 to 24 words are not to be shared with anyone. Period. And you'll see scammers posting fake wallets in the comment section. Make sure you ignore those and don't interact with those at all. We try to flag them as much as possible, but they're bots and they just keep coming back. And it's kind of the nature of the beast, unfortunately, in the crypto space. But don't share those keys with anyone. Those keys are what give you access to your crypto on the blockchain. Now that brings me to how blockchain technology works in a nutshell. So the basics are this: your cryptocurrency is not actually stored in your wallet. So when you hear of cold storage, meaning external wallets like a Ledger or an Ellipal happens to be my favorite wallet. I'll link that in the description if you're curious about what that is. It's a little bit more advanced to understand, so I would get used to playing with hot wallets first, but ultimately when you're buying long-term assets that you want to hold on a long-term basis, things like Bitcoin or Solana or Ethereum, those are something that you can store in a cold wallet and just hold for the long haul if you want to self-custody your crypto. Now, those keys that I just mentioned, those 12 words that give you access to your tokens, that's because your wallet address is a public wallet that's on the blockchain, and those keys, those 12 to 24 words that you were given when you opened a wallet, are what allow you to access them. Think of your wallet address as a safe deposit box on the blockchain and those private keys as the keys to open up that lockbox. If anyone has those keys, anyone can open up that lockbox. And that's why you don't want to store those digitally, because if you do, scammers can get them. They can hack into your computer. Or if they do hack into your computer because you download the wrong file and they happen to find a file that's labeled recovery phrase, or they're able to find those keys, they're going to be able to take those and then access your crypto. Now, right now, if you're starting to feel overwhelmed and you're like, listen, Howard, I don't know if I'm cut out to actually store something on a wallet. I'd rather store something in an account like Charles Schwab, for example. And you want to know, how do you store your cryptocurrency with an institution like that. The best thing or the safest thing for you to do is to look into investing into something like an ETF. There is a Bitcoin ETF. One of my favorites is the IBIT ETF. You can also buy the Grayscale Bitcoin Trust, which is BTC is the ticker, but IBIT technically has a little bit lower fees, and that makes it a little better. There's also an Ethereum ETF, and the ticker for that ETF is ETH, short for ETH. And there's even a couple tickers for Solana where you can buy into Solana through a few ETFs as well. And I believe that's Solz, spelled SOLZ, as well as SSK, but I'm not 100% sure off the top of my head, so I'll make sure I link those in the description for you. But the bottom line is, if you're trying to invest into the more mainstream crypto coins like that, where you can still get massive returns, where you're talking about the average return of Bitcoin over the past 15 years has been over 100% annualized. And so when you look at that, that is an excellent return by comparison with most stocks. The S&P 500, for example, averages somewhere around 8%. So jumping into the crypto space, you are going to see massive volatility by comparison. That means volatility to the upside as well as volatility to the downside. Now, a little bit later in this video, I'll touch on why I think we're going to see a lot more volatility to the upside because of what's happening with the regulatory environment. But for now, I want to talk a little bit more about crypto truths that a lot of other channels might not tell you. The truth about crypto is that most projects are going to zero. That's right, most of them are complete garbage. As of the filming of this video, there's over 9 million tokens that have been created. And the reason you haven't heard of most of them is because most of them are total crap and never amount to anything. Now, when you start investing in some of the ultra low market cap coins like PAW, for example, which is a coin that has real utility. It's a multi-layer chain that helps tokens, for example, our token, scale across multiple blockchains, meaning that if you want to buy a token that is on Ethereum with a chain like PAW that allows you to cross across multiple chains, you're able to interact with that chain. If you only have, let's say, Solana in your wallet, you could perhaps buy that token with Solana and bridge across chains. Now, this is a very revolutionary technology in the space. There's other coins and projects that do this, but the bottom line is, as of the filming of this video, PAW is a very low market cap coin. I think the market cap is somewhere around 7 million, and it's hovered somewhere between 7 and 15 million the past, several months or year while it's been built out. But the bottom line is that this technology has the opportunity to be revolutionary, but it also has the opportunity to fail. So you need to take that with a grain of salt when you're investing in lots of projects, because I've invested in projects where I've spent 10 grand and I watched it go way up and then I rode it all the way back to zero. And so the golden rule in crypto is to try and take profits along the way, especially when you're investing in more risky coins versus selling off your entire bag all at once and trying to time the top, which I promise you right now, I don't care what any trader tells you, you're never going to be able to do. And the reason is because, number one, you're in price discovery. Number two, it's a new all-time high every day, every week, every month. You're in price discovery. And as a result, it's almost impossible to wonder if the bull market is over or if it's going to keep going. And so that's why if you take profits along the way and you leave what's called a moon bag or a small bag of any token that you really have high conviction in, so that way if you sold off half of your coin bag on the way up and you took profits on the way up, then that last little bag that you have, if it turns into the next Ethereum or the next Solana or the next Bitcoin, you're able to capitalize on that 1000x, 10,000x, or even higher gains because you held through volatility, because you didn't care about that particular bag, because you had it at a very, very low market cap. You bought it when that coin was not very valuable. And then as a result, as the adoption and the demand increased, you were able to be in the right place at the right time, and you just got lucky. And the nice thing about crypto is it's not all luck. You see, when you go out and you buy a lotto ticket, it's actually just luck. There's nothing you can do to help the project. But in this space, you can actually join the community. You can actually get active on Discord or Telegram or whatever communication platforms they have. You can market for them by retweeting their posts and things like that on Twitter. So you can actually take an active involvement in helping promote a project that you actually believe in. And that's what helps drive values in the crypto space. The same thing is true in traditional finance, it's just through different mediums. You see, everyone might be buying a certain stock because they watched Mad Money Kramer, which is a big mistake. If you watch that guy, you should probably stop. up, Dad, I'm talking to you, because the truth is that show does exactly the same thing that you see in the crypto space, except in crypto, this game is played on Twitter and it's played on social media. And so that's where people get their information about these projects, because they're not discussed on mainstream media, and you're not going to find them anywhere being discussed on mainstream media until it's old news. Once it becomes a project like Solana or Ethereum or Bitcoin, where it's achieved an ultra high market cap and there's still room to run, but it's a very mature project, that's when they start talking about it on mainstream media. And at that point, a big chunk of the volatility and the upside potential has been lost. Now, one thing I found very intimidating when I got into the crypto space, and you'll probably find the same is true for yourself, unless you're maybe smarter than me, which would not be unlikely. I found the amount of terminology in crypto to be extremely overwhelming. I heard things like DApp, DAO, layer 1, layer 2, layer 3. I had no idea what any of it meant. And so I was always kind of confused and felt like I was playing catch up trying to figure it out. And so I want to explain some of these high level terms so you understand what it is and what it means. A DApp is short for decentralized app. This is an app that integrates with any sort of blockchain. So for example, if you want to stake your coins on a specific crypto project, a lot of times crypto projects, especially newer ones, will have a DApp, or a decentralized app that you can communicate with or integrate with, where you can connect your wallet and you can stake your tokens. Now, what is staking? Staking is a way to tie up or lock up your funds in a way to receive a yield or a percent of income and percent of revenue. So here's how this works. Let's say you go to your bank and you were to buy something called a CD, or certificate of deposit. Well, that certificate of deposit will pay you an interest rate or interest on your money while your funds are locked up inside of that CD. The same thing is true in the crypto space. They just call it staking. So staking is just you being willing to tie up your funds for however long the staking protocol dictates, and it's going to be different across most platforms. It might be a week is the staking requirement, or 2 weeks is the staking requirement on some coins. It's going to vary across the board, but the bottom line is when your coins are staked, they're locked up, and then in order to unstake them, you actually have to manually unstake them, and it takes about 2 weeks or a month, or however long the contract dictates for that particular staking protocol, to get your funds back. And as a reward for staking and adding your coins to the liquidity pool, meaning that you are providing liquidity for traders and people that want to buy and sell the token, you are getting some of that transaction value back in the form of a yield, meaning that if you, let's say, put $1,000 into a staking pool and you were getting a 10% staking yield, that would be $100 that you were getting in terms of staking revenue. Now, lower market cap, riskier coins tend to have much higher staking protocols or much higher staking yields that they pay out, whereas mature projects tend to pay lower amounts. But again, that is all going to vary based on the specific smart contract that you're operating with. And that brings me to my next definition that is important to define, and that is a smart contract. What is a smart contract? Smart contracts are self-executing digital agreements that are written in code and stored on a blockchain. That is the technical definition of what a smart contract is. But essentially, think of a smart contract as this. It's basically a computer program, and each project, for example, Ethereum or Solana or Bitcoin, they have their own computer codes that you can write a code on top of, and that code that's written on top of a specific ecosystem, which is just another word for a smart contract, for example, although it can be used in different contexts sometimes. But a smart contract built on top of Ethereum is basically coded in Ethereum. A smart contract written on top of Solana is essentially coded in Solana. I'm using very layman's terms, terminology, and words just to make it simple to understand, but that's essentially what a smart contract is. And so when you hear people talking about smart contracts and things like that, that's what that means. But the bottom line is that they are decentralized and they carry out specific actions without the need for any sort of third-party approval. And the decentralized nature of these smart contracts is what makes them valuable, because we don't need a middleman to execute transactions or execute functions on a blockchain. Perhaps one of the most important, if not the most important things, is I'll talk to you about how you actually make money in crypto, because the truth is most people, when they first get involved, they lose money. Sometimes they lose a lot of money and it leaves a bad taste in their mouth. And I'm going to tell you how to not do that. And it's about how you develop a strategy that sets you up for success. And it's absolutely free. I have no course to sell you. No. It's the way you actually make money in crypto. Now, earlier, one of the things I mentioned that I would teach you is how you actually make money in crypto. And the truth is, it's actually very simple. What it comes down to is it comes down to asset allocation in terms of your portfolio. For example, if I was starting from scratch today and I didn't know what coins to buy, I would start with Bitcoin That would be my biggest bag. The next coin I would buy would be Ethereum. And the next project I would buy after that would be Solana. And between Bitcoin, Ethereum, and Solana, those are more stable projects where there's still going to be volatility if you end up buying the top of a current market cycle, because in crypto, there are cycles, there are periods where things go up and down. If you're holding Solana, Ethereum, and Bitcoin, I guarantee you within 1, 2, or 3 years, might even take 4 if you bought at the absolute top of the market, you will be able to at least get your money back and then catch the next bull market. And the truth is if you're getting involved late in the game in any given bull market, which in this particular bull market, I don't think we're actually going to have a blow off top like we've had in prior markets because of all the institutional funds that are flowing into crypto. It is going to provide a lot of stability and a lot of reduction in volatility because of the fact that it is becoming a more and more stable asset class. But that's neither here nor there. If you follow the golden rule of investing in larger, more safer, secure projects, there's definitely not as much upside in terms of you're not going to get those storybook gains like you would have if you had bought Dogecoin in 2017 or 2018 or 2019 before it blew up and did several thousand multiple run where you could have turned $1,000 into 50 grand or 100 grand or more. But the good news is you're not going to lose money. And as Warren Buffett says, the first rule of money is don't lose money. The second rule is C rule number 1. And it's very wise advice, especially in the crypto space. But if you do buy these coins and make this a very solid foundation for your holdings, you're going to be set up for success as a beginner in the crypto space. And if you're curious to know about some of the other projects out there where you can get some of those higher storybook gains, I'll make sure to link a video at the end that you can check out at your leisure if you want to explore that. But just keep in mind, you're gonna lose money. You're probably going to lose all your money on those coins. They're very risky, or they can be very risky, because the truth is young projects are just like young startups. So just replace the word low market cap crypto with startup company, and it's the same type of concept. A lot of startup crypto companies fail as well. And so just heed that caution, take it with a grain of salt, and invest at your own risk and do your own research. Now, this next piece of advice I have for you is some of the most important advice if you're new in the crypto space. So it's important that you listen to this. But if you're enjoying this content so far, please hit the like button for the algorithm and consider subscribing to the channel if you haven't done so already. We put out daily and weekly content on how to stay up to date on the latest trends, technology, and coins in the crypto space. And we also talk about my project, which I mentioned earlier, and we'll talk about here briefly. So if you want to stay up to date on what's happening in the space, subscribing is a free way you can support the channel, and it's also a free way that you can stay up to date because we have no courses, no trading programs, or any sort of that we're trying to sell you. And this next topic that is the most important part of this entire video is how to avoid scams. Now, because this is a complex topic, we actually made another video that talks about the top scams in the crypto space. And so we'll make sure to link that at the end of this video for your convenience. But here's my general advice as it relates to scams. In order to avoid getting scammed, anytime someone or something, meaning an app, a text message, an email, is asking you to do something with your crypto, whether they're asking for your keys, they're telling you to call them. Coinbase will never send you a text message asking you to call them and sending you a phone number to reach out to. That is a scam, for example. If you're ever in doubt, or if you're ever wondering if it's a scam, assume it's a scam and go through a verified source. And the way you go through a verified source is meaning if you got a text message from Coinbase and they said your account's frozen or someone was trying to withdraw money from your account, you can go ahead and open your Coinbase app and you can contact them directly. You can share the text message with them directly and say, hey, is this text message a scam? I just wanted to verify whether or not this was you. And when in doubt, try to search it out and figure out whether or not it's an actual scam. You can even do a simple Google search. For example, if someone is trying to tell you to connect your wallet to something and you're not sure whether or not it's safe to connect your wallet to that, you can do a Google search and search, is it safe to connect my wallet to this? Or is connecting my wallet to an RPC node a scam? Short answer is yes, it is. It's a scam. Don't do that. But you'll oftentimes connect your wallet to dApps and all sorts of things that you're going to be interacting with depending on how intense you get into the space, whether you start buying NFTs and things like that. And so it's going to be necessary for you to get comfortable with what you are able to do and what you're not able to do in order to stay safe. And when in doubt, do a quick Google search on anything that you're doing, or even just plug it into ChatGPT and it will give you a quick answer on whether or not what you're about to do is going to get you scammed. And as mentioned earlier, there's a few videos popping up on the screen right now that YouTube thinks you should watch and that we mentioned earlier. So check those out if you haven't done so already, and we will catch you on the next episode.